Hi, welcome to this recording. Thank you for calling in or listening in as the case may be. So this is just a due diligence overview to sort of orient you as you prepare to join a due diligence team, hopefully, or if you're just interested in learning more about what the process entails. If you do have any questions about due diligence after watching this, please do reach out to me. My contact information is there at the bottom of the slide. I love talking about due diligence, of course, being that I'm here. So please do reach out to me with any questions you have, and I hope to see you on a due diligence team soon, hopefully. So I want to start by talking a little bit about our overall due diligence philosophy, kind of why we do what we do, just to kind of lay the groundwork for what you can expect throughout the process. So the first thing I want to emphasize is that due diligence is meant to be primarily a fact-finding mission, not so much about rendering an opinion when it comes to the actual report. You're going to be looking at a lot of information about the companies. You're going to be asking companies a lot of questions. You're going to get a lot of answers. And you want to be sure that you're presenting that information in the written report in an objective and unbiased fashion. As unbiased as the due diligence process may be, if you put a lot of subjective language or a lot of opinion language in the report, it's going to come across as not so trustworthy or not so unbiased as perhaps it may actually be. So we want to make sure that the actual written report is objective and about presenting facts, not so much about rendering an opinion on the company. That comes later. The second thing that's a little bit unique about Keiretsu's process is that the process itself is pretty company-driven. We leave it to the companies to talk to investors, kind of soft circle interest, bring investors onto the due diligence team, making sure that the due diligence team is progressing forward through all the steps, making sure that the process stays on track and that other investors are kept in the loop as to what the due diligence team is doing. The reason for this is pretty simple. We see due diligence as both a very powerful investigative tool for investors, as well as a very powerful funding tool for companies. It's a great way for companies and investors to form really close relationships, get to know each other really well, and for investors to really find the best deals. So we do really want the company to be front and center throughout the process. That being said, it's extremely, extremely important, as I mentioned earlier, that we're objective in our process, that we're unbiased, that we're finding the facts and presenting the facts that we need to find and present. So the investigation itself, the kind of core purpose of due diligence is very much investor-driven. So this means that you as members of the due diligence team are responsible for deciding what to look at, how closely to look at it, and how to present the information that you find. If you feel that a section of the report is perhaps not so relevant to the company, or if you feel that something not in the template report is particularly relevant to the company, feel free to include or exclude information as needed. We want to make sure that you as the investor are the one that knows what investors want to see. So we want to make sure that we're using your expertise appropriately. So please do bring your judgment and your own abilities to the due diligence process. So looking at kind of the stages of due diligence, this is sort of split into 6 or 7 categories, depending on how you want to classify it. So the first step, of course, is just deal screening and roadshow presentations, those first couple weeks at the beginning. And this is really your first contact with the company, being able to see what they have to offer and really deciding whether you're even interested enough to pursue it further, to learn more. And hopefully you do want to learn more. Hopefully you do fill out on your gold sheet poll that you're interested in investing or interested in joining the due diligence team. And that tells us that you are in fact interested enough to want to join the due diligence team, or at least stay in contact with the diligence team. So this is where we get into sort of that team building phase. This is where the company is reaching out to interested investors, figuring out kind of where folks' interests lie, what questions folks may have, and figuring out who wants to join that diligence team to really dig deep into the company. This usually takes a week or 2 after forums end. Sooner is better. We don't want to lose momentum. But we also understand that it takes a while for folks to look at the slides, look at the fact sheets, and really get a sense of whether they want to dive deeper or not. That then brings us to sort of the first phase of the substantive portion of due diligence. This sort of starts with the kickoff call and then goes over the next couple of weekly meetings. And that is the questions and verification stage. This is where you're asking the company questions, getting some initial answers, and going back and forth like that for a time until you have the information that you need from the company. The company's provided you all the information you've asked for, and you've had a chance to digest it, verify it with some independent research, cross-reference it with other team members, and generally make sure that what the company's telling you checks out on average. The second half of the substantive due diligence phase is really that deep dive. This is where you're doing some additional verification, really getting into the nitty-gritty of the company, comparing it to sort of industry research. You might be interviewing customers, interviewing references, and then this morphs into then writing your section of the report. So you as a member of the due diligence team will be responsible for one or potentially more sections of the report as you're interested in. And this is where you're really putting pen to paper or fingers to keyboard, as the case may be. Writing the report, making sure that the information that you've gathered is now compiled and presented in a way that's easy for investors to understand. Once everybody's happy with the report, once the facts have been verified and the information is put on paper, the final step here is sort of that publication process. And this usually takes 1 or 2 weeks after the report has been more or less finalized. This includes the due diligence team reviewing the report, making sure that everybody agrees with what's presented, giving the company an opportunity to review the report, just checking it for factual accuracy. And then myself and Brianna McDonald, our regional president, also review the report just to make sure that it is presented as objectively as possible, that it's up to par, and that there's no major gaps in the information presented. At that point, it gets distributed to all of the interested investors of the company, as well as the company is then free to distribute it to anybody else from other groups that are interested in seeing it. At this point, it becomes really important. You, as a member of the due diligence team, are now the expert in the room about this company. So we want to make sure that you're sharing that knowledge with other investors. We do appreciate it when members of the due diligence team make themselves available if other investors have questions or even just want to hear your opinion on the company, just to get a sense of what the due diligence team looked like. And we do facilitate that to an extent, and I'll touch on that towards the end of this brief overview here. So what we're shooting for is the report, of course. This ranges in length depending on the company and how complex the company is. And you can get a sense here from the table of contents what sections we typically ask the DD team to look at. And again, you're the expert. We want you to use your judgment to decide which of these sections apply or don't apply and how much you want to spend on each section here. So to outline some of the roles that you might take on a due diligence team, the first role, of course, is that of the lead. And essentially, you're going to be then writing the executive summary, compiling the information that everybody else has written into just a few pages at the front of the report, making sure that it's presented in a way that's easy for folks to understand. The second area that you might be responsible for is looking at the sales and marketing strategy or potentially the competitive landscape. And the goal of this section is really looking into the company's sales pipeline, understanding the value proposition to customers, understanding the revenue model, how the company makes money, and what the company is doing to further its sales strategy and its marketing strategy. You might also look at the competitive landscape, looking at essentially who else the company is competing with, as well as what the overall industry looks like and what the company is going to have to do, what milestones it's going to have to meet to start gaining traction in the market or to expand traction if it already has some. The third role on a due diligence team is looking at the financials, the deal terms, the exit potential. And this can be a little bit more technical of a section. Essentially, you're looking at the financial statements historically, making sure they look reasonable, nothing's obviously misclassified, making sure they present kind of the full picture. And then you want to look at the financial projections as well, making sure that you're validating the company's assumptions and making sure that it's a believable hockey stick. We don't want it to be an unbelievable hockey stick. You'll also be looking at the deal terms, making sure they're reasonable. Our term sheet committee, of course, helps with this as well. And then we do like it when you look at the exit potential, just looking at, perhaps what comparable companies have been acquired for, what the multiples look like in this space, and again, what milestones the company has to hit to actually get to the point where they become an attractive acquisition target, or if there's another exit on the horizon, any other sort of liquidity event. The fourth kind of role on the team here is looking into the product and the technology, or perhaps the intellectual property. For more of a product company where there's a physical product being made, we do like to look at the supply chain, the manufacturing process, all of that to get a sense of how the product is being made and how it's being sourced. If you're looking at something more like software or life science, pharma, for example, this tends to be a little bit more on the science and technology side, really understanding what science or what technology the company's product is based on and where it's at in research and development. You may also choose to look at the intellectual property portfolio of the company, its patents, its trade secrets, its secret sauce, if you will. Make sure that it's protecting itself, it has NDAs in place, it has assignment of rights in place, that it actually owns its IP, that the IP doesn't obviously conflict with others. Just making sure in general that the company has IP and is protecting it. And again, IP can come in many forms. So this could be patents, it could be trademarks, it could be just a trade secret or other secret sauce. Perhaps one of the most important things on the team, and perhaps one of the things that investors look at the most carefully, is the management team. Understanding, is this management team trustworthy, honest? Are they going to communicate well? Do they have prior experience in either an exit capacity or at least a startup capacity or an industry capacity? And this really consists of interviewing their personal and their professional references for the CEO, other founders, other top managers or senior employees. You can think of this like interviewing job references. If you're applying for a job and you give a person's name as a reference, it's those references that you'll be calling and emailing just to get a sense of who the management team is and whether you really believe they're the right team for this job. In addition to this, the Keiretsu Forum team, we do conduct a background check on at least the CEO as well as any other member of the team that the due diligence team feels is appropriate. The final section of the due diligence team here is looking at corporate governance. And I like to think of this as just making sure the company's ducks are all in a row. If an acquirer comes to the company, we want our companies to be able to present them with their binder of corporate documents with everything there, everything the acquirer needs to see so that the acquirer doesn't just run for the hills at all of the gaps and the holes and everything. So this is really just checking all the boxes, making sure the required documents are available in the deal room for anybody who wants to see them. So that then takes us to bringing it all together, forming the report. So each member of the team by this point has drafted each of their sections. This is usually 6 or so weeks into the due diligence process, where each team member has drafted their sections. You'll want to run it past the company just to check for factual accuracy. And I do want to emphasize here, the company should not be writing the report. The company should not be putting words in your mouth as the investor. We want the report to be written by investors for investors. What we do want the company to review for is factual accuracy, making sure that the facts that are presented are correct. So for example, if you put in the report that the company has $1 million in revenue and the company actually has $2 million in revenue, that's the sort of stuff that we want the company to be fact checking for. And then of course we want them to provide the information to back that up before any changes are made. The next step here is for the team lead, the DD team lead, to work with me to compile the report, make sure formatting is cohesive, kind of edit for those minor grammatical errors, that sort of a thing, just to make sure that the report is presented as professionally as possible. At that point, I and Brianna, again, will review the report for objectivity primarily, as well as just to make sure that there's no major gaps in the content that's presented. At that point, the report's ready for publication. Once the due diligence team approves the report to go out to investors, it does in fact go out to investors. This is a really important step, so I do want to emphasize it. We do not publish a report until the due diligence team is happy with it. So once every member of the team has had a chance to review the report and sign off on the report, that's the point at which it gets published and available for other investors. And then at that point, of course, the company is free to distribute it both to their interest lists within Keiretsu as well as they may be entertaining. All right, so I want to spend some time talking about what we review for when Brianna and I are reviewing reports, because this comes up a lot, and it really is just meant to help keep the report appearing as objective and as unbiased as possible. When you start having squishy language or particularly opinionated or subjective language like you see on the left there, it just calls into question how objective the report really is. There's nothing wrong with the due diligence team saying, for example, that the company is producing superior tasting coffee or has very fast growth or a superior product. It just doesn't give the context your reader needs to really trust that you dug into the information correctly and weren't just taking the company's word for everything. So as unbiased as the process may be, what this really looks at is making sure that the report also appears unbiased. And that's really important to sort of the integrity of the whole process. So to give you some examples of how we might rewrite these subjective phrases here, so instead of saying something like superior tasting coffee, you might say that traditional roasting methods result in burnt char, which gives coffee its bitter flavor, and the company's methods result in less char, thus brewing a less bitter coffee. This is a much more powerful sentence. Now we know that the company has some proprietary roasting methods. There's some secret sauce there that it can protect in its IP. We also know exactly why it's superior tasting. We know that it has to do with the bitterance in the flavor profile. In fact, we could even make this stronger by talking about which competitors it is less bitter than, just to even quantify this a little bit more. Conservative financial model is another major pet peeve of ours. Conservative financial model really doesn't tell me as the reader much at all. So rather than just say that, we want to actually know what the financial model is based on. So for example, you might say that the model is based on achieving a certain % market share after a certain number of years. Even stronger is to benchmark that against what similar companies have projected or actually achieved. Now I can look at this sentence and I can say, okay, this company is planning on achieving 2% market share after 5 years. Other companies have achieved 3% after 4 years. Now I have the information I need to look at this sentence and decide, is the company being cautious? Is the company being conservative in its projections? Or is this actually, even potentially a red flag that the company's model is actually lower than what other companies have done? And of course, that could go the other way if the company's model is higher than other companies or whatever the actual numbers work out to be. The goal is just to give investors as much information, as much quantifiable information as possible so that they can make their own decisions. The final example I'll touch on here is any situation, really most adjectives tend to be very squishy and subjective. So unless there's a need to use them or unless you're using them in a very precise way, we want to make sure that the report is presented as objectively and sort of as scientifically written as possible. So instead of saying things like fast growth, substantial growth, and this applies to other similar phrases, actually give the percent growth, actually give the number of years of experience of the management team or whatever the fact is that you're trying to present here. Make sure that those facts are given to give context to your reader. All right, the final thing I want to touch on before I wrap this up is the diligence and review call. So this occurs after the due diligence process is complete, after the report's been approved by everybody, after it's gone out to investors, and after the company has come back to give an update to its investors. The purpose of the due diligence and review call is really to be a candid discussion between interested investors and members of the due diligence team. So the company is not on these calls. The company does not receive any recording of these calls or anything like that. This is strictly meant to be a very open, honest, candid discussion where the DD team now can present its opinion to investors who are interested. This is your opportunity to give your opinion. We want to keep the report as fact-based as possible, but these diligence and review calls really are where now investors want to hear your opinion. So typically I'll kick things off with just a quick introduction of the company, just to recap where things are at, introduce members of the due diligence team, and then ask members of the due diligence team to introduce themselves. Give your professional background, kind of what you looked at, how deeply you looked at it, perhaps even what you didn't look at and why, as well as ultimately what your findings were. Just to summarize essentially what you put in the report, as well as overlay your opinion on top of that. This again is really your chance to opine on the company, the industry, the management team, anything else you may have an opinion on relevant to the company. And then we do like it if you're willing to, if you're able to, let us know how much you invested, if you invested, and what your reasons for investing were. Or conversely, if you did not invest, what your reasons for not investing were. That's really helpful information to our investors, just as they kind of decide whether they themselves want to invest or not. So these introductions, typically it takes about 15-20 minutes to get through everybody on the due diligence team. And then we open it up for investor Q&A for the rest of the hour. And this is really a moderated Q&A opportunity between investors and the diligence team, just making sure that investors have the opportunity to ask you any questions that maybe they're not as comfortable asking the CEO, or that maybe they want your opinion on before they ask the CEO, just to help them in their own personal due diligence processes. So that takes us through most of the due diligence process here, kind of looking at what the roles on the team are, what the overall timelines are, and kind of what the final review and publication process looks like. So I want to thank you for listening in. Hopefully this wasn't too brief, and hopefully it also wasn't too long. So I do want to thank you. I do look forward to working with you on a due diligence team here in the future. And again, if you have any questions for me, my contact information is there at the bottom. So again, please reach out if you have any questions, and I look forward to working with you here at Keiretsu. Thank you so much. Bye-bye.